again, good afternoon, everybody. I hope everybody can hear me. Welcome to our second webinar on U.S. Treasury reporting guidelines. This will be a two-part webinar, the first focusing on Treasury reporting requirements, and the second half will be focused on interdepartmental transfers, within state departments and agencies within the state of Vermont. My name is Brad Ferellan, a Deputy Secretary of Administration and leading the COVID Financial Office. Joining me today and our team is Sue Zeller and Justin Kinney from the Chief Performance Office, Josiah Reish from ADS, Brenda Berry from the Agency of Administration Financial Office, Cassandra Ryan from the Department of Finance and Management, and also with us is Guidehouse, our consultants that are helping us navigate the exercise, CRF exercise. And representing Guidehouse today, I have Lena Hashem and Hillary Thompson. And finally, I'd like to introduce our latest addition to the state team, and that is Doug Farnham. Doug Farnham had up until recently been the Deputy Commissioner of the Department of Finance and Management. But as many of you know, that I will be retiring on October 30th, which has nothing to do with COVID-19, by the way. I picked that date last January, well before the pandemic hit. But Doug will be assuming the role of the Chief Financial Officer in the COVID office. And more broadly speaking, he will be the Chief of Operations in the Agency of Administration. And Kristen Klauser will be assuming the role of Deputy Secretary of the Agency of Administration. So again, that's Doug, and Doug will be replacing me in the lead role in the COVID office. I would just like to remind people that we will be, taking questions. Don't hesitate to post questions in the comments section, and we'll be reviewing those throughout the course of the presentation and trying to address those kind of questions on the fly, if you will. And if we don't get a chance to get to them, we do post frequently asked questions on the Finance and Management webpage under the COVID-19 section. And especially following a presentation like this, we try to update those at least daily to get all the questions. And as questions come in every day shortly after this presentation, we will update those. So if you could look there first and try to answer any questions you might have, and if not, then send us the questions and we'll get back to you. The guidance you're going to be presented today, again, is based on the guidance that we have available to us today. That being, the window of opportunity to spend COVID-related dollars is still 12/30. We have received no additional funding beyond the $1.25 billion of original CRF funding. Whether or not that changes or not, time will tell. Part of why we're presenting this today is that since we had our last presentation, the reporting deadlines changed. The U.S. Treasury deadlines changed. And the reason they changed was because we as a state have chosen to do our reporting to the Treasury through an automated process through their web portal. So as a result of that, that's pushed our reporting deadlines back considerably compared to those that are going to be reporting manually. And so we'll present those timelines to you here throughout the day. And as a result of the presentation we did before and the submittals that we have received, we have made changes to the reporting templates, which we will go over today as well. Lena will be doing that. Lena will also be talking about the deadlines for submission. We'll also talk about some of the feedback and present some feedback on the reports that we had received earlier, and again, go over the template changes. And again, if everybody could just use the comment sections, that would be very helpful throughout the course of this. And just one closing thought from me before I hand this over to Lena is that I would just like to say that, with these CRF dollars, we should all be proud of the efforts that we have gained in terms of standing up the grant programs and putting these dollars to work for the state of Vermont. It clearly hasn't been easy in the last few months. It has been challenging, stressful, and at times quite overwhelming in a lot of cases. But we can't lose sight of the tremendous positive impact that these programs, and funds have had on Vermonters, over this same period of time. And for that, I would just like to say thank you to everyone, and that and in the role that any of us have played in this process. And it has actually been very, very impressive to see the amount of effort put forth to get to where we are today. And so with that, again, thank you very much. And now I will turn it over to Lena and let you take it from here, Lena.
Thank you so much, Brad. And just confirming, can everyone hear me okay and see the presentation on the screen?
Yep, you're good, Lena.
Great, thank you. So we'll start by giving an overview of the updates to, oops. Sorry, I think.
Brad, turn your camera off.
That's where I was headed.
You can minimize Teams. I think that'll fix it for you.
I think actually Brad has control
Yes,
over
he has to give up. Yeah.
Teams, so let me just stop sharing screen and share again. Can everyone see the slideshow okay?
Yep.
Yes.
Yes.
Great. So just to go over quickly the updates that we made to our CRF Treasury reporting process. The first thing that you'll see in the updated CRF process and policy guidance is a clearer distinction between reporting requirements for prime recipients versus reporting requirements for component units. This webinar is focused on the reporting requirements for prime recipients, and we have a follow-up webinar that focuses on reporting for component units. Both will be using the same template, which is the CRF Treasury reporting template. The second change that we've made is clarifying reporting for CRF obligations and spending that involve interdepartmental payments. And we have a follow-up webinar right after this one to go over these changes in detail to make sure that all reporting entities that are impacted by this guidance have a clear way forward as to how they would report. The third change that has been made is a change to the reporting periods and reporting deadlines, which I'll go over in a minute. And that is based on what Brad mentioned, which is updated Treasury guidance around the deadlines that the state of Vermont has in light of being selected for the Grant Solutions upload feature. The fourth change we have is a change to the reporting payroll, which is also based on updated Treasury guidance, and we had notified you of this guidance earlier, but we wanted to make sure that we cover it in the webinar to answer any questions that you have on how to report on payroll. And the last main change that we've made to the CRF Treasury reporting template that has been circulated is that you'll now see fiscal year 2021 excess receipt requests added to the projects tab. So you'll be able to select fiscal year 2021 projects to report on them using the template. And on the right here, we have some reporting resources that you can reference for additional guidance. And this will be posted on the State of Vermont website as well, so that you have access to the presentation and resources. So to start with changes made to the reporting timeline. In this table, we have our updated reporting periods as well as the due dates for when prime recipients are required to submit their reports to the State of Vermont. And I'm seeing that my screen no longer shows again.
Yeah, Lena, we're looking at some status report from Guidehouse.
Yeah, I'm not sure.
Someone else might be sharing.
Somebody,
Yes.
if anybody else is sharing their screen, please don't.
Can
Does
everyone
somebody have
please?
share tray open? Try sharing your screen again, Lena.
Is it working now?
Yes. Now you just have to go into PowerPoint show. Click the presentation. There you go.
Thank you, Sue. So going over the updated reporting timeline, the main change that we have, and this is based on Treasury guidance, is that we now need prime recipients to report on CRF period to September 30th. And this report is due on October 16th. So previously you had reported on March 1 to June 30th. And then we had a separate reporting cycle for July to September. But now Treasury has let us know that since the state of Vermont has been selected for the upload feature, we are required to report cumulatively on CRF obligations and spending incurred from March 1st to September 30th. So please use this as your baseline report and include in this report all CRF obligations and spending for this reporting period. And again, this is due on October 16th. We'd like to point out here that in subsequent reporting periods, we will request that CRF appropriation recipients submit reports. We call them interim reports, and we request that you submit these monthly. And within each quarter, the monthly reports will add up to a final quarterly report for each reporting cycle. So where you see the reporting periods shaded in green, that's the final report for the quarter. And the intention there is for the final report to match the reporting period required by Treasury. So for example, for the next reporting period starting October, Treasury requires the state of Vermont to report on CRF obligations and spending from October 1st to December 31st, but then the state is asking CRF appropriation recipients, so all of you, to submit interim monthly reports for the month of October, and then from October to November, and then from October to December 31st, to end up with one final report for each quarter. I'd like to point out here also that you'll see some reporting periods in the next calendar year, 2021. Those reporting periods are left open by Treasury to allow entities to have closeouts or to make reporting changes. But the CRF Treasury guidance still holds that any expenses do have to be incurred by December 30th, 2020. So the reporting periods that are open in 2021 do not allow the state to incur expenses in the next calendar year. They are only allowing reporting in 2021 to allow entities to report on changes as they make payments for expenses incurred in the calendar year 2020 up to the end of the covered period, which is December 30th, 2020. So we've covered this in the last webinar, but we'd like to go over it again to make sure that the reporting process is clear to everyone, and to go over any changes for reporting in this webinar. So all CRF prime recipients as well as component units are required to use the CRF Treasury reporting template for purposes of reporting to Treasury. And this section guides us through that process. The first thing that we'd like to make clear is the distinction between obligations and expenditures. That comes up frequently. An obligation as defined by Treasury is a commitment to pay a third party with CRF proceeds based on a contract, grant, loan, or other arrangement. However, the entity incurs an expenditure when the CRF amount has been incurred as a liability of the entity. So that's when the service has been rendered or the good has been delivered. And the performance or delivery must occur within the CRF covered period, which starts on March 1st, 2020 and ends on December 30th, 2020 for the cost to be considered incurred. We'd like to go over this process, and this is targeting prime recipient reporting. So in the CRF template that you've used before and that we've updated recently, you'll see that you have a projects tab. The projects tab has been pre-populated with fiscal year 2020 and 2021 projects. The legislative appropriations for fiscal year 2021 have not been updated because we expect that no entities will incur costs between March and September 30th from the new fiscal year 2021 legislation. However, the projects do have fiscal year 2020 receipt requests, which you can select as a project where applicable. So you'll go to the projects tab. You'll want to make sure to update the and description of your pre-populated CRF projects. Then you will want to identify any individuals or entities that you obligated CRF funding to or paid CRF to. Then, depending on whether the recipient is an individual or entity, the reporting differs. So if the recipient that you are giving CRF funding to or obligating CRF funding to is an individual, you will report the obligation and expenditures in the aggregate payments to individuals tab. If the recipient is an entity, there's another decision point to think about whether each obligation that you as a prime recipient make to the entity is less than $50,000 or more than $50,000. And that's based on that threshold, again, the reporting will differ. So for each obligation to an entity, if it's less than $50,000, you will report on it in the aggregate for obligations under $50,000 tab. And this will allow you to report in aggregate for these obligations and spending, and it will require less data from you. However, if your obligation to an entity is $50,000 or more, you will report on this obligation based on the type. So if you as a prime recipient obligated CRF funding to a subrecipient as a contract, you will report on this in the contracts if your contract is $50,000 or more. And then the same applies if it's a grant, transfer, or direct payments tab. So depending on the type of obligation from you to your subrecipient that's $50,000 or more, you'll go to the corresponding tab. For each subrecipient obligation, you'll enter the obligation amount for your project. So there's a data field that allows you to select your project for the obligation, and then you can report the obligation amount. Then for each project obligation amount, to break down the expenses into multiple lines by expense category. And as a prime recipient, we expect that you will follow up with your subrecipients and coordinate with them to make sure that the expenses that you are reporting are accurate. We've updated our payroll reporting guidance in light of most recent guidance received from Treasury. So this is our guidance, and it's also reflected in the Vermont CRF Treasury Reporting FAQs, but we thought we'll go over it here again to make sure it's clear. So how you report on payroll depends on the scenario that you are facing as a prime recipient. If you as a prime recipient are giving CRF funding to another government entity, which will cover their payroll, You will report on this based on the obligation type. So let's go through an example. If you're a prime recipient and you're giving a grant to a municipality for the municipality to cover payroll for police officers, you will report this in the grants tab if the obligation, in this case, the grant to the municipality is $50,000 or more. So you will not report this in the aggregate payment to individuals tab because you as a prime recipient are not paying the CRF money directly to your staff for payroll. You are giving this funding as an obligation, as a grant to a municipality. So you will report it in the grants tab. As the municipality uses the CRF funding to cover their payroll, you will report this as expenditures and you will select the appropriate expenditure category, and there are a couple of payroll categories there that you can select from. You'll coordinate with the municipality to get information on payroll expenses so that you can report them accurately. The other similar case, so if we take the same example of a prime recipient giving a grant to a municipality for payroll, if in this case the grant provided is less than $50,000, you can report this in the aggregate for obligations under $50,000 tab. Because again, the grant to the entity that's going out from you as a prime recipient is less than the $50,000 threshold. The last scenario is if you as a prime recipient are using CRF funding to cover expenses of your own staff. So if you're using CRF to pay for payroll of your own. And in this case, because your CRF funding is going directly to individuals, then you can report on the obligation and expenses in the aggregate for payments to individuals tab. One thing that's important to note here is that there is no threshold in this third case. So if you're a prime recipient and you're using CRF for your own payroll, regardless of the amount, even if it's over $50,000, you can still report it in the aggregate for payments to individuals tab. Another case we'd like to cover is statewide contracts. So we have many of these in the state of Vermont, and we'd like to clarify here that for purposes of reporting to Treasury, you are only reporting on the CRF specific contracts. And in this case, Treasury has pre-identified categories for contracts, which include purchase order, delivery order, blanket purchase agreement, or definitive contract. So again, you're only reporting on the CRF specific contract that's coming out of the statewide contract. So let's go through an example. Let's say the state has a statewide contract for purchasing PPEs. And this contract runs from 2016 to 2022. If you've then issued a purchase order, specifically the CRF funded to cover COVID-19 related purchases of PPE within the covered period, you will then report on the specific CRF purchase order. And where it says the contract number, you'll report 2203. The $50,000 reporting threshold also applies to the CRF specific contract. So let's say the statewide contract is $100,000. If the CRF purchase order is only $20,000, you can report on this in aggregate. However, if the CRF purchase order is $50,000 or more, then you will have to report on it in the contracts tab. We'll now go over quickly details related to how you submit your CRF Treasury reports. So when you're ready to submit your CRF Treasury report by October 16th, we ask that you please send it to the emails listed on this slide. And you'll be able to email this to Brad through October 30th, after which you can email your CRF Treasury reports to Doug, Justin, and the ADM email. When you submit your reports, you may face a case where you have to report corrections from one reporting cycle to the other. So if you need to change the reported CRF obligation or spending from one reporting cycle to another, we have an example that we'd like to go through with you. So let's say you have a $100,000 contract in August, and this was expanded to include additional COVID-related scopes of work for $50,000 in October. For contract amount in the template, for the October 16th report, you will report a contract amount of $100,000, which is what you knew of the contract amount during that time. For the current reporting period obligation, in your October 16 report, you will also report $100,000 because the current reporting period obligation is asking you for what the obligation amount is as you know of it in this current reporting period. Then, if you are later submitting the January 6th report, you will have seen that this contract was changed to include additional scopes of work for $50,000 in October. So in your January 6th report, you will replace the contract amount that you reported previously to $150,000, which is the total amount of the contract as is most updated. However, for the current reporting period obligation for the January 6th report, you'll report $50,000, which is to the contract amount in the reporting cycle that you are reporting on. However, for interim reports, because those interim reports are not submitted to Treasury, they're only submitted to the state. If you face changes within the reporting cycle, so within the quarter, we ask that you just update your final report of that quarter to reflect the most accurate contract amount as well as the most accurate current reporting period obligation. So you don't need to report just the change, you can just replace your figures to reflect the most accurate amounts for that report. And now we'll go over feedback on previous reports and template changes, which I'll hand over to Justin to walk through.
Excellent. Thank you, Lena. So we just want to spend a little bit of time talking about the submissions that we received on September 11th and providing a little bit of feedback to folks on those, as well as some of the changes that we've made to the template itself in response to the things that we've been seeing. So I'll say in general, majority of the submissions were great. Data quality was really good. Everything was filled out appropriately. There were a number of instances where things were not filled out properly or not done correctly, and I just wanted to highlight those as basic awareness for all of you moving forward on your newest submissions. So one of the things that was happening was that sample data that was included in the template was not being deleted. And what ended up occurring was when we would consolidate all the worksheets together and get a total that was not matching many of the reports that we were pulling from Vision. So we had to go back in and delete a lot of those rows. We fixed that in the new template, and I'll show you that in a minute. We also saw in a couple cases, I guess a handful of cases, that folks were filling out the transfers tab, and they were including transfers in there from one agency to another agency or a parent agency to a child department. The transfers tab is specific to us as kind of a state of Vermont prime recipient, giving money to another governmental entity that is not us. So the case where that might play out would be if we were giving money to a municipality, we could see a transfer there if it wasn't a grant. But if it's money going from AHS to DCF or AOT to ANR for whatever reason, that does not constitute a transfer because we are all in the eyes of the Treasury seen as the state of Vermont. So that was one other thing we noticed. We also noticed in a couple of cases that expenditures were and it did play out with the transfers being one situation where that happened, but expenses being duplicated across multiple tabs. So that should not be the case. Every dollar that is reported on a tab should be a singular and distinct dollar, and it should not show up in any other tab. So when we add all of the tabs together, at least the current reporting period expenditures, those should be the total that we would see, hopefully, out of what comes from a report in Vision. There are also cases where a number of necessary fields were not. So we would have maybe one field, the current expenditure, filled out, but no other data associated with that. So you do want to make sure that you are completing an entire row of data. There are some columns that are not necessarily required and they're optional, and usually that will be listed in the description of that column, but just be mindful of that, especially on the subrecipient tab. You either have to have a DUNS or a unique identifier. You can't have blanks for either of those. It has to be definitely one or the other. And if you have a DUNS, then you don't necessarily need to have the address information, although it's certainly helpful to have. So definitely try to fill out as much of the required information as you possibly can, because that makes it easier for us to do the query and pull in all the necessary info. There was also a couple cases where there were obligations made for $0, and those I would say should not be reported because they're not actually an obligation of money. So you would report those when there's actually a dollar obligation or a dollar expense associated with those. So just don't provide those at this point in time. So in terms of template changes, so I'll share my screen so you can see some of the things that we've done. And I want to walk you through that specifically so you're aware of how the worksheet functions. So the newest version has been sent out. We have made a couple minor changes to the bill back tabs, which we're going to talk about in the next webinar, but everything else should be set based on the copy that you have. One thing that we've done is added a submission summary, and this is really a benefit for you. So we have included a formula here that will total everything in the expenditures category for each of these individual tabs. And so once you're done putting your data in, you should be able to go back here, and the hope would be that the total that shows up here would be everything that is in your workbook. If there is a discrepancy between this and what you believe is in each of the individual sheets, likely it's because a table has not been expanded to include all of that. And I'll walk you through that in a minute. But this is meant as kind of just a check for you to go back and say, oh, yes, this is the total that I am reporting. We didn't have that before, and we felt like that would be a benefit. In terms of the reporting agency department, you no longer have to provide your DUNS, again, because for the purposes of the Treasury, we are all one prime recipient, but you do need to select your agency from the top drop down. So all of them should be in here that need to report. If for some reason you don't find yours, definitely let me know and I can add that and make sure I send a template back out to you. Terminology has not changed. Projects has not really changed. Lena talked about adding a number of projects here, so those should all be there. One thing that has changed is the way that the subrecipient table works. So for subrecipients, it used to be that if you went to a contract and you tried to select a subrecipient from the list, it would be pulling from this subrecipient DUNS. In many cases, there were no DUNS, and it would just say no DUNS, no DUNS, no DUNS. And so when you would try to select a contractor from the list, it was very hard to know which contractor you were selecting because they all just said no DUNS or they were blank. So we've changed that now to be pulling from the legal name. So if we put a legal name here of Justin's, now in the contracts tab, Justin's should show up as an option. So just something to be mindful of. You will want all your subrecipient information to be in here first so that you can properly pull from the drop down here and select the appropriate vendor. And on the back end, we'll just pull in their DUNS or their other identification number to match it up with the legal name when we need to do our reporting. So that's one change there. All of these are now tables. And so for folks that haven't used tables, table is a distinct element in Excel. It's similar to a named range, although it has some additional functionality. Every one of these workbooks is associated with a table. So this is a contracts table. This is a grants table. This is a transfers table. Tables have a name very quickly. If you're in the table and you go up to table design, you'll see that there's a name in the top left. And when we pull in calculations like this, you'll see here that it says sum of contracts, current reporting. So this is summing everything that would be in this particular column. Go back a little bit here. Everything that would be in this column. And so you'll see that we've provided a little over 250 rows. If you need more than that, you can always right click and insert, and all the data validation should come down and appropriately be applied. You can also click on the bottom here to drag a table down and make it bigger. But again, if you see something in the summary that is not doesn't seem to be included, it's probably because the table is not referencing all the individual columns. And there's some information here that we've added in terms of how to make sure that the table works. But just so you know, these are all tables. Please don't change the names. Please don't change the column names. Very important that this is consistent for us so that we can sum up close to 25 different submissions in one workbook. Other tabs are similar in terms of how this dropdown works. The other thing that we've done for consistency purposes is for, I'll say here, for each of these subrecipients, there is now a drop-down list of towns. So this is a definitive list of towns from the GeoData portal, and we'd like you to select from that list. You do have the option of writing in another town that might not be in Vermont. Let's say if you had a vendor for some reason that was in Boston, Mass, you can certainly write in Boston, but to the extent that you can, it would be wonderful if you can select an appropriately named town from the list. One thing we were seeing, which I didn't mention, was a lot of misspellings in the city names. And we do have a concern about when we upload to the Treasury portal that might get bounced back to us. So to the extent that you can, again, choose from the town list, especially for any that are in Vermont. I think that's probably most of the changes. The column order has not changed. We color coded the ones that were drop downs. All of that is the same. So it should be a very similar experience aside from, you know, the subrecipients and that being a drop down and the color coding. And I think that's probably it in terms of major changes, at least for this part of the workbook. We are going to get into, in the next section, this whole bill back tab, which is its own beast. So we'll talk about that in a little bit. But I think that's it for me. And certainly if you have any questions, post them in the chat and we'll cover that at the Q&A at the end. Excellent. So back to you, Lena.
Great, thank you, Justin. Okay, so now we'll cover some frequently asked questions that we've received to make sure that they're clear to everyone. Those are also posted on the Vermont CRF Treasury Reporting FAQs on the website. So you'll be able to see a full, more extensive list of questions and responses there. So 4 FAQs that we'd like to cover because we think they're very important and will apply to everyone for reporting. The first question that we received is, if a prime recipient obligated funds in August, but did not expend any funds against this obligation until October, what is the prime recipient required to report for the reporting period of March 1 to September 30th? So this is the report that's due on October 16. In this case, even if you have an obligation for your reporting period and you don't have expenses, you are still required to submit a CRF Treasury report where you report on the obligation for the reporting period, and you can just note an expense amount of $0 if you have no expenses against that obligation. So if you have a contract in August, but you still have not expended any CRF funds in that reporting period, you will still want to report on the contract and provide the contract details that we request, even if the expense amount is $0. In the following reporting period, you can then report on expenses tied to that obligation as they are incurred. The second FAQ that we've received is if you've been appropriated CRF funding to use for eligible expenses that were incurred before you actually received the CRF funds. So let's say you temporarily charge that to the general fund until you receive your CRF funds and charge them to CRF then. How do you report on those expenses? Here we ask that you report your expenses in the reporting period in which they're charged to CRF in the Vision system. Once you report these expenses, you'll see that we ask for data fields that identify the expenditure's start date and end date. The expenditure start and end date will capture the date that the expense was actually incurred. So you're reporting on the expense in the reporting period where you charge this expense to CRF and Vision, but your expenditure date range is actually reflecting when the expenses were incurred. For obligations, we'll ask that you report CRF obligations in the reporting period that these obligations were made, and in that case, it should be that you have a definitive determination that the obligation will be funded using CRF. So if you're still not sure whether an obligation is funded, is going to be funded with CRF, we ask that you don't report on it in this reporting period and that you save this for a reporting period when the obligation has definitively a decision has definitively been made that the obligation will be funded using CRF. The third FAQ that we'd like to cover is if the prime recipient has a CRF contract worth $60,000 with a subrecipient, but they only incurred $10,000 of CRF expenses in this reporting period. Can the prime report on this contract in aggregate? And the answer is no, because the $50,000 threshold applies to the contract amount. So it's an obligation threshold. It's not the threshold for the expenses that are incurred against that obligation. So in this case, because the contract is $50,000 or more, in this case $60,000, then you'll still want to report on this in the contracts tab, not in the aggregate tab. In the case of direct payments, for payments that don't have existing obligations, only in that case can you apply the $50,000 threshold to the direct payment if an obligation does not exist. And the final FAQ that we'd like to cover asks, how should a prime recipient report a lump sum payment versus a reimbursable payment to a subrecipient? So the first case, if a prime recipient is making a lump sum payment to a subrecipient, we ask that you please report the total obligation for the lump sum payment to the subrecipient. So the total lump sum payment is your obligation amount. Now, as the subrecipient uses the funds it received, the prime recipient will collect and report on the uses of the subrecipient as expenditures tied to the obligation. And the expenses that you report will be broken down by expenditure category. In cases where the prime recipient is providing CRF as a reimbursable payment to a subrecipient, you'll report on the obligation to the subrecipient first. So what is the grant agreement that's in place or other agreement that obligates CRF funding to the subrecipient? As you make reimbursements to your subrecipient using CRF, you'll report these as expenses tied to the obligation. And here again, you'll want to list your expenses broken down by expense category. So this concludes the material that we wanted to go through for this first presentation. We'll take questions for the remaining few minutes, and then please feel free to reach out to the ADM email account listed on this slide for any additional questions that you have. If we don't have time to cover them today, we have been updating the FAQ page regularly, and we make sure that it's updated to account for daily questions that we receive. So I'll pause there, and then Sue, if you're able to read questions from the chat box, that would be really great.
Sure, I can do that. Okay, so the first one is from Kelly Carbo, and she says if we have a contract that starts 10/1 and ends 12/30, but some of the work is not completed at 12/30, that work after 12/30 is not considered incurred, correct?
Yes, the answer is that's correct. However, you should not have any CRF expenses that are incurred past 12/30.
So in this case, Lena, does that mean that they cannot claim any expenses that were not incurred by 12/30?
Yes, and furthermore, and we receive this information typically in our grant and expense questionnaires, we always try to make sure that not only are the CRF funded works complete before December 30th, but we also ask to document the COVID-19 related benefit that is accrued to the state before December 30th. So you wouldn't be able to charge partial works to CRF if they don't provide a significant COVID-19 related benefit before the end of the CRF covered period, which is December 30th.
Okay, our next question is about where is my FY21 appropriation? It was made and it's not listed in the project tab. How do I get it in there?
So if it's an FY21 legislative appropriation, we have not included these in our current reporting template because we expect that there will be no cases where you're charging an expense to CRF or making an obligation to CRF for that appropriation by September 30th. So if that's not the case, please do reach out to us and we can resolve this on a case-by-case basis and check.
Okay,
Sue, this is Brad.
Yep. Mm-hmm.
Sue, this is Brad. I reached out to Marcy, and we're going to talk about her specific appropriation after this.
Okay.
But I think part of what we were thinking happened here is that a lot of the appropriations for those departments who received new appropriations in the recently passed Budget Act, that budget went into effect on October 1st and is outside of this reporting period. But what we're trying to figure out is whether or not, for those that were established in July for the first quarter, and then also included in the restated budget, whether or not we've missed those or not. So we're going to have to take a look back and see whether or not there are some that we did miss. But anyway, we'll reach out to everybody. And if you do have an appropriation that you should be there, that you have expenditures that you've incurred between July and September 30th that isn't there, please reach out to us and let us know.
Okay. So I have a question from Aaron Brodeur about clarification about Treasury guidance versus, excuse me, CFR 200.77, which requires funds must be obligated within the period of performance, but in the case of CRF expenditures must be, excuse me, I have to cough again. Sorry, not COVID, swallowed something. So anyway, expenditures must be booked during the period of performance and requires obligations be liquidated within 90 days of the end date of the period of performance. But for CRF, this pertains to expenditures. Is that correct?
So Your obligations and expenditures should fall within the CRF covered period for expenses made from CRF and obligations made from CRF. The expenditure is defined as when the service is rendered or the good is delivered, so the actual period of performance for the expense or obligation. However, Treasury does allow for you to make a payment in 2021, and they usually estimate that it could be up to 90 days after the expense is incurred. So the answer is the expense should be incurred within the CRF covered period. However, Treasury allows for payments to be made beyond the covered period, and they usually estimate that it could take up to 90 days from the end of the covered period or when the expense is incurred.
Okay, so I have a question now that was asked by Jill Briggs Campbell from Education, which has already been answered, but for everyone's benefit, I'll read it. On the subrecipient page, can we set it up ahead of time? In other words, pre-populate all of our CRF subrecipients, even if we are not reporting an expenditure for that subrecipient in that particular period? And the answer from Justin is, I don't believe so, because then those subrecipients would be uploaded to Treasury even though they receive no obligation or payment. Okay, here's another question. Yep, that's correct.
To add to that, Sue and Justin, so agreed with Justin. However, if it does help you to pre-populate your subrecipient information, you could save that and send it to us separately. It won't be uploaded to Grant Solutions until the full information is complete. So until you have obligations or expenses that are incurred in the reporting period.
Okay, next question from Jillian Nigel. If an entity has 50,000 or less and reported in the aggregate, but later becomes 50,000 or more, how would you like that reflected?
So if your obligation was $50,000, or in this case, less than $50,000, let's say you have a contract for $40,000 and this was changed, you can, in a subsequent reporting period, report this change in the contracts tab, and then you will also reflect the change in the aggregate tab. So where it says, have there been updates this quarter, you can select yes, remove the amount from the aggregate tab, and then report on this in the contracts tab. So this way we make sure that the expense is not reported in a duplicate way, and each dollar is only accounted for once, but that you're also reporting based on the Treasury threshold of, if an obligation is $50,000 or more, it will be reflected in the contracts tab in this case, because the example I used is contracts. If you face this challenge, please do feel free to reach out to us and we'll work with you on how to update your reporting or make reporting changes, because it is more challenging to report than other more straightforward cases.
Okay, so that is actually all the questions that are in the chat right now. So would you like me to just take control and do part two?
Yeah, sure. Thank you so much, everyone, for your time. And then this following webinar will be specific to interdepartmental payments using CRF. And I'll forward to you, Sue, and stop sharing my screen.
So Sue, I'm going to stop recording and then start. So we have two separate recordings.
All right. Let me just find the thing here. Where is it? Here it is.